Alrighty guys, welcome back. My name is Sarah Smith. This is video number 5 in my 8-part series on how to pass your life insurance exam, where we are going through just different practice questions. From now on, there's no page number, or there's no question numbers on the sheet that I'll be sharing my screen with. So I have to have my cheat sheet so that I can keep myself, I know where I'm going. Because this is video number 5, if you're starting here, please don't go to number 1 so you can see my whole spiel. Just a quick rundown. I'm in California, so a lot of these questions are like practice California questions. You can just disregard those if you're not in California. Most of the material is general across the board, so you should still benefit very well from this. I have decided that I'm going to make a couple extra videos because I was so bad at uploading the 5 that I owe you guys. So I did find in this was something that a friend of mine who actually failed his test the first time, I helped him for like 3 weeks. We would study together almost every day. And this was like, he had these questions, printed this out, made this book, and he passed the second time that he took it after we worked together for a couple of weeks. And that's what made me think like, oh, let me start teaching a class on this just for like our team and our company. And then that took too much time, which I talked about in a couple of my past videos. I'm making these so that I can give them not only to everybody on our team that decides to come and get their license, but also I can just put it on YouTube and you guys can benefit from it too. But my little gift to you is I found a couple like additional questions in the back of this book that I guess we had used to study with at some point. And I guess he put them here. I don't know. I didn't put them here. I've never really seen them, and they are different than all of these. So I will make 2 bonus videos. There's 50, so I'll do again 25 each for those short attention spanners like me, if you can't tell. And then I'm going to also make 2 vocab videos because, like I say, check down in the description box below. There's a link to my vocab Quizlet that I created. I would also give this out when I would teach my class, and people loved it because I always say it's like learning a new language. You have to study your vocab first. You will not pass this test or any test unless you know your vocab and you know what these words mean and what concepts they are describing, right? So once you know your vocab, these questions will answer themselves. So I'll make that for you guys as well. Okay, let's get started. I'm going to share my screen and we will get right into it. We're doing question 101 to 125. Like I said, there's no numbers, so I have my cheat sheet so I can keep track of where to stop. Okay, y'all. Which of the following statements correctly describes a contract of indemnity? Now, indemnity is a term. I would always say this during my class. If you do not know what indemnity means, you are probably not going to pass this test. Indemnity is what I like to call the definition of insurance. So that's your little hint. I'll let you pick which one you think it is. And your answer is A. One party is restored to the same financial position the party was in before the loss occurred. And I know we've done indemnity before in previous videos. Indemnity literally just is the definition of insurance, right? We're restoring the party that had a loss to the same position that it was in before that loss occurred. So if you go out and you get into a car accident, what happens? You have a claims adjuster come out, take a look at the damage and say, okay, it's, X amount of dollars worth of damage, here's a check. Or it's a total loss, the car is worth this, you owe this, here's a check for the difference. Go get yourself a new car, right? So we are just basically, making your loss go poof. All right, which type of annuity guarantees a stated number of income payments, whether or not the annuitant is still alive to receive them? So basically this means which type of annuity will continue right, a stated number of income payments, will continue to pay for that number of income payments to your family, even if you are no longer here. That's going to be life annuity certain. And that certain right there tells you that it's for a certain number of payments. Easiest way to remember it. An individual that has 40 quarters of coverage for Social Security purposes is considered to be what? And this is fully insured. An insurance policy written after 1988 that fails to pass the 7-pay test is known as what? And this is going to be D, a MEC, or a modified endowment contract. An individual most likely will have an insurable interest in insuring a person's life if okay, and this is going to be A. An economic interest exists for the continuance of the insured's life. So you guys know that in order to get a life insurance policy on anybody, there has to be insurable interest. So you always have insurable interest on yourself, your own life. But someone like your parents, your children, a spouse, you'll have insurable interest on them because there has to be a direct financial, I guess, consequence or burden due to the loss of that person in order for you to have insurable interest. So now this is just saying that that insurable interest has to exist for the entirety of that insured's life. So I guess a good example would be like if you have insurance on a spouse or you want to get insurance on a spouse, if you guys divorce and you don't have children, that insurable interest would go away. I hope that that kind of helps explain that concept. What does the guaranteed insurability option allow an insured to do? Guaranteed insurability option. And this is going to be B, purchase additional coverage with no evidence of insurability required. Obviously, if it's a guaranteed insurable option, you don't need to go and prove, right, that you are insurable. Hence, you don't need evidence of insurability. Don't need to go through medical underwriting or anything like that again. A non-participating policy will do what? And this is C, not pay dividends. So we know that in a previous video, I think I kind of drew out what participating policies look like and how they pay their dividends and why they pay their dividends. So of course, a non-participating policy, you're not entitled to those dividends. The California Insurance Code, this is a California one, allows an individual how many days to cancel a life policy and still have a full refund? And this one's going to be C, between 10 and 30 days. If you are in North Carolina, that's not true for you. I had friends in North Carolina that I was helping study, and it was one of the hardest states to study for. I didn't really know anything. It's one of those states that's like very state law specific. So if you're in North Carolina, study your specific state laws because they're just different. I think, again, 11/11, I want to make a wish. I wish you all pass your test. I think North Carolina is 31 days, but don't quote me, unfortunately. Which of the following is not true regarding a family policy that covers children? This is going to be conversion of child's coverage to permanent insurance requires evidence of insurability. Yeah, okay, so conversion of child's coverage, anytime you're converting, you shouldn't need to prove insurability. So that's kind of how I would explain that there. Level premium permanent insurance accumulates a reserve that will eventually level premium permanent insurance, which we know anytime we see the word level, a light bulb should go off in our head to indicate that we're talking about a whole life policy. And this is going to be equal to face amount of the policy. And they're on 111. Before an insurer is allowed to test an individual for HIV, what must be completed? A consent form. I think that makes sense. According to the California Insurance Code, what term, sorry guys, according to the California Insurance Code, what term is used to describe a fact so important it could affect the policy premium? This is a California one, but I have a feeling it probably goes for most states too. And this is going to be materiality. So I'll use like real estate as an example of this. Material just means that it is a relevant fact. So if I'm showing somebody a house and there are, like we have in the MLS, like confidential remarks, let's say that somebody had passed away in the house within the last like 3 years, I have to disclose that. That's a material fact. If there's, let's say, like termites and we know about it, if I'm like representing a seller, that's a material fact that you have to disclose because it could affect like the desirability of the house. So same thing with insurance. A material fact would be, an example would be like if you had cancer in the last 10 years, or if you currently have diabetes, something like that that affects your health that could affect the policy premium must be disclosed. So that's material. In California, an insurer organized under the state laws of Oregon is called this is not California specific. This is United States specific. This is going to be a foreign insurer. And that is, so if you're in California and this is an insurer that's organized under the state laws of Oregon, if it's state to state, a different state, it's called foreign insurer. If you're in America, or not America, if you're in the United States and this insurer has state laws that are organized under a different country, that would be alien insurer. So that's the difference. Foreign would be state to state inside the United States, alien if it's outside the country. Which of the following would disqualify a company's retirement plan from receiving favorable tax treatment? This would be D, it's temporary. So retirement plan can't be temporary. Kind of need it to go on and take you through to retirement. So would not receive favorable tax treatment if it were temporary. Which of the following is not a characteristic of the conversion privilege? We just talked about this a couple questions back. So what's not a characteristic of the conversion privilege? All right, so we'll walk through this one together. Let's talk about what are characteristics of the conversion privilege. So right, we talked about it, I think last video. If you leave your job or if you are fired from your job and you have life insurance and you choose to convert it into something individual to go from group to individual, right? You, as the ex-employee, pay the premium for that converted policy because now it's an individual policy that you get to keep. So you do, A, pay the premium. And B, proof of insurability is not required. Yes, and I would always talk about this when I would teach my class. I think that's one of the biggest characteristics of the privilege. Like that's the biggest privilege of the conversion privilege, is that you might be an individual that has health issues that can't qualify for individual insurance with a different company on your own. But you might have a little bit of coverage through your group plan and then leave that, and you don't have to prove insurability. If you leave, you get to keep $50,000 or whatever your policy is if you choose to convert. This is a huge privilege of the conversion privilege. And then D, the conversion must take place within 31 days of employment termination. That is true. It's a great privilege to have, but you have to exercise it within 31 days of the termination of your employment. So what's not a characteristic is that the employer pays the premium for the converted policy. It's now an individual policy, so the individual pays the premium. When intentional concealment is involved, what course of action is the injured party entitled to? So I talked about, right, just in the last question, talking about material. You have to disclose material facts that could affect your rating with the company, that could affect your premium with the company. You must disclose those. So if you intentionally conceal one of those material facts and the company didn't figure out about it right away, issued you a contract at a favorable rating, and then found out later within your 2-year incontestable window, right? Because after that, you're fine. But within that first 2-year contestable window, they would have the right to rescind the contract. So A is the correct answer, rescission of the contract. And the injured party would be the insurance company because you lied to them. Basically, you hid something that they should have known about. How are death benefits that are received by a beneficiary normally treated for tax purposes? I'm going to go a little bit deeper in this explanation with you guys because I'm a little bit wiser these days and have learned a bit more. So your answer is C, exempt from federal income taxes. This is true. Life insurance death benefits are exempt from income taxes. They are not, however, exempt from estate taxes. Why is that important? Well, estate taxes are due on the death of wealthier individuals. So depending on who you are and who your sphere of influence is, who you're marketing to, who your clients will be, you need to be aware of this fact because you can't just go around, talking to somebody who's worth 35 million saying, oh yeah, life insurance, it's not taxable at all. That's just not true. And here's why. We each have an exemption amount as far as federal income taxes go. It's today 12.9 million. So right now, if I were to pass away, if my net worth does not exceed 12.9 million, I don't owe the federal government any estate taxes. Now, depending on what state you're in, your state might have its own estate taxes. And I'm from Maryland. Maryland has an inheritance tax too. So not only is there a state estate tax, there's also a state inheritance tax. So the person that passed away that's worth whatever has to pay an estate tax to the government. And then me, as the beneficiary, inheriting whatever's left, if it still exceeds a certain amount, I have to go and pay my inheritance tax. So you get taxed freaking twice. So you have to be aware of this stuff if you want to be a more sophisticated life insurance agent. But it's the level of your exemption for estate taxes changes all the time. So it's going to change come 2026. It's going to reduce from 12.9 million down to about 6.5 million, 6.9 million, something in that range. So meaning that if a couple today is married and you've got clients that are worth 25 million today, they're pretty okay, right? If they're worth like 24, because 12.9 times 2, about 25, right? Or 20, almost 26 million. They're good. But when it reduces, you have to be more aware because the new estate tax exemption is only going to be 13 million. So it'll reduce from 26 to 13, it'll be cut in half. So if you're dealing with somebody who's higher net worth, you need to be aware of that when you're recommending life insurance products to them, that they're going to have to pay estate taxes. And if they're right on the cusp, let's say they're worth, I don't know, 11 million, and then you go and write, insurance policies for both of them that are 2 million, you're going to push them past that limit. So they may not know about this. They may not plan for it. And if you don't know about it to bring it up and you don't plan for it, you could have some pretty unhappy folks if they pass away and their family now owes taxes because you weren't aware of this rule. So I digress. I know that was a little in depth, but federal income tax exempt, not estate tax exempt. And again, state by state, the amount of estate taxes that you will owe will vary. If like Washington has its own state estate tax, but of course these are like wealthier individuals. So if you don't have that sphere of influence or those aren't the clients that you're catering to, then you're fine. You can let people know that they will not owe any income taxes on their life insurance proceeds. Their beneficiaries won't. All right, y'all. I hope that was helpful. If not, skip. Sorry. All right, in a MEC, the penalty tax imposed on premature withdrawals is what? And this should be pretty easy. This is kind of like the same as a early withdrawal from a 401k, but it's 10%. Who is eligible for retirement benefits under Social Security? 119. This is going to be A, fully insured workers. So that's your 40 quarters of coverage, fully insured workers. Okay. The importance of a representation is demonstrated in what rule? And representation is one of your vocab terms that y'all should know. Representation is what you make to the company. So when you're going through the application and you say, I'm Sarah Smith, I'm 29, I was born, January, blah, 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 right? I don't have diabetes, I have asthma, X, Y, and Z, whatever my answers are to all those questions that are asked on the application, those are representation. That's what a representation is. So the importance of each of those representations is demonstrated in which rule? C, materiality of concealment. So basically what that is saying is if you're concealing something, like what's the materiality of it? Is it a material fact? Is it not a material fact? Would it change your opinion or your rating? So C, materiality of concealment shows the importance of a representation that you make to the company. Which statement is correct when describing a contract of adhesion? Okay, again, adhesion is one of those vocab terms that you should know. Hopefully by the time this video is up, my vocab video will also be out and you can go and study vocab terms over there. Well, 2 vocab videos. This is going to be A, contract may be accepted or rejected by the insured. So what does that mean? There's 3 parties to an insurance contract, right? The insured, so let's use me as an example, the insured, right? I'm the person or the thing being insured. The insurer, which is the company, and then you have the beneficiaries, right? So it's your 3, sometimes 4, but 3 right now. Well, I guess 4 because owner, insured, insurer, beneficiary. Sometimes it's three, because the owner and the insured are the same. So me, I own my own insurance contracts, and then I have people that are my beneficiaries, and then the insurer is the company doing the insuring, right? So in a contract of adhesion, the contract may be accepted or rejected by the insured. That basically just means there's not going to be any negotiation. So when I put in my applications, I have 3 policies. When I put in my applications for each of my policies, I said, I want, I've got one that's 250,000. What is that? I want 250,000 of coverage and I want to pay X amount a month for it. And then I put an application and I say, this is all of my stuff, right? These are all of my representations that I'm making. The company takes a look at my MIB, my consumer report, everything, and says, okay, for $250,000 of coverage, you have to pay X per month. And then me, I come back and I can't say, you know what? I got attorneys around me and they say never accept a first offer. You got to do better than that. There's no negotiation with that. I either accept it or I reject it. If I accept it, I just pay my premium and that policy goes in force. If I'm like, oh, I want to see if like National Life Group can do better than American National, then I might just say, okay, no, thank you. American National, I'm going to go put in an application somewhere else. But I can't negotiate. There's no negotiation. You take it or leave it. What are collateral assignments normally associated with? Collateral assignments. These are going to be bank loans. A. A person who asserts a right of recovery under an insurance policy is called what? Asserts a right of recovery, meaning I have a right to recover money for my loss. B, claimant, the person who makes the claim. Okay, this next one is California specific. Jim is applying to become an insurance agent and has a past misdemeanor conviction that was later expunged due to California Penal Code 1203.4. Which of the following statements is correct? Because this is California, your correct answer is going to be B. Jim must still disclose the conviction on his insurance license application. Now that is California specific because when you're going through the application in a different state, like I've got licenses all over and I've got teammates all over, a lot of times they're like, you wouldn't have to disclose something that had been expunged, but in California, you have to disclose everything. So there's the regular application that, is federal and all states have the same one. And then in California, there's an additional page that will come up that says, disclose, do you have any of these? Even if they're expunged, disclose. Do you have any of these, like misdemeanors, felonies, whatever? You have to disclose, even if charges have been dropped, whatever, you have to disclose everything in the state of California. Let me see where we're at. All right, last one. After a policy has lapsed, which provision allows the insured to continue coverage? Now, this is after the policy has already lapsed. This is not going to be grace period. This one's going to be reinstatement. So the difference between reinstatement and grace period is grace period is if you've missed your payment, but you're still within that window of X amount of days, whatever the grace period is, and your policy has not yet lapsed, they're kind of just like gracefully allowing you to make a late payment. Whereas the reinstatement is the policy has already lapsed and now I want to pay it up and put it back in force and keep it now make it current. So that's the difference between the two. All right, y'all, that was 125. So that is the end of video 5. I hope it was helpful. I know I always wonder if the tangents that I go off of like help everybody. I don't know if they do or not. I'm trying to make you guys as educated as possible because a lot of the things that I talk about are things that I've like learned over the last couple of years of like my career and just being out in the field and having more situations arise. So I do my best to help you as best I can and prepare you as best I can. So I hope this was helpful. Yeah, we'll see you in video 6.